Right, folks, Thursday, the 30th of September, last day of the month. Just want to show you where I am. Let me just adjust this camera up a little bit. Where I am with the Euro US dollar. The dollar index, I'll show you actually with some charts that I've just printed off from another platform because we don't have the dollar index on smart charts. But I'm going to show you the euro first because the euro is usually just a mirror image of the dollar index or close to it. So on the monthly chart, you can see that we're testing the 50-month moving average down there, the red line. On the weekly chart, you can see we are testing the 100 and the 200 week moving averages down there after quite significant drops from the 23rd of May. So we're talking quite a few months through the summer of the market just declining, stronger dollar, not completely unexpected, but there you go. Nice, you can see there also the 500-day moving average also offering nice resistance up there. So these moving averages do work. 500-week moving average, sorry, the blue line. So these moving averages do work. We will see if we get a bounce off there. What we've already seen actually is a bounce. Let me get rid of some of these fibs. On the Aussie, I also talked about strong support that the Aussie was testing. Again, longer term moving averages. Now, let me just get rid of all of that. There we go, that's much easier. Now, again, 200 and 100 week moving averages. We're seeing a good bounce off of those. I did give you the levels in the reports this morning, so you're already aware of all of this. We did dip below the 50-month moving average in the Aussie, so we'll see where that goes. But right now, I'm mainly focused on these weekly moving averages, which do appear to be holding. Again, let's have a look at the daily chart. Probably as oversold as the euro. Yes, it is. Both of these markets have been pretty oversold in the slow stochastic for at least 10 days. And do we actually have a bullish engulfing candle? Yesterday's low was 71.69. Today's low is 71. Oh yeah, we do. We have a bullish engulfing candle here as well on the daily chart for the Aussie, which is helping to sort of reinforce the message that we've bounced off a strong support level and maybe the tide is turning. Maybe the trend will reverse and the market actually might start heading higher. We might see the dollar see some losses in the dollar going forward over the days and weeks ahead. Now, this is a daily chart of the dollar index. As you can see, I've had to print that off. Now, we've got some moving average. No, we don't. We've got some fib resistance, some confluence of fib resistance around 94.40, 94.50. And the index is now trading around 94.20. So we've already backed away from that resistance level. You can see also on the daily chart that we've got this green. That's the 200-day moving average. Sorry, that's the 500-day moving average on this chart. So a longer term resistance level on the daily chart. And also I have, if I can find it, there is my weekly chart, which I'm just blowing up now. And as you can see, we've hit some fib resistance again. I've got the same Fibonacci levels on the weekly chart as I have on the daily chart. And the 100-day, or the 100-week moving average that I have on this chart also offering resistance. So for me, the dollar index really is hitting very critical resistance levels as we speak. That is holding. So we really are at a very crucial point in the dollar. Will it turn, or will it break significantly above these levels for a medium-term buy signal? If we, for example, close above 95.00 in the index on Friday night, let's say the market powers ahead tomorrow, that would be an extremely bullish signal for the dollar. But right now, we are holding the resistance. So my concern is that the market starts to turn lower and we see a bit of profit taking in the dollar. Quick look at the stock markets. The S&P had bounced nicely off the 43, 40, 30 level. We're retesting it now. We'll see if that holds, but that has been a good level during the week so far. The crazy stuff is gold. I did not expect to see gold turn around and absolutely rocket. We've recovered 3 days of losses. Let me see now. What are we there? Thursday, Wednesday, Tuesday, Monday. So the week's high on Monday was just 1760. We have got as far as 1764 today. So we really have had one heck of a bounce in gold. I don't know what to suggest next, really. I'm going to take these fibs off. If we were to look at a shorter term chart, the 4-hour chart's always worth looking at at times like this. We can put some Fibonacci levels on. And this really is just one. I've been saying this about gold for a while. This really just is in one massive sideways trend. and we're not seeing any deviation from that trend now. The market heads down and then suddenly rockets. Well, we've got the 38.2% fib around the mid 1760s, so we'll see if that holds. If you're trying a short position, I would suggest a stop above 1770. That's where the this moving average, the 100 period moving average, is showing the yellow line. Could be worth a try. I don't know. That's one heck of a run, and I guess it would be surprising to see the market go even higher when we're already up something like 30 points or something today. And when we're up 40 points from the low, so that's one heck of a recovery. Crazy times. But still, when you look at the market on the daily chart, it still is only in a sideways trend. This was just a short-term downtrend in what is otherwise a sideways trend, and now we're recovering up to that 38.2% fib, which appears to be holding at the moment. We've got a high at 1763, which is bang on that fib actually, and now we're backing away from it. Okay, crazy markets there, the metals all over the place. Now oil, actually, where's oil? This is worth a mention. I'm wondering if this is starting to enter a sideways period of consolidation. We've had a good run up. We're overbought. This is a bit more of a negative candle that we had on Tuesday. And since then, we've traded sideways. So we might form a bull flag in oil before we break higher again. I don't see this as a particular sell signal. Yes, it is a negative candle. Some people would say, oh, that's the end of the trend. Market's going to turn down. It might be the end of the trend at the moment, but for me personally, I think that we'll probably consolidate rather than collapse. Anyway, that's just my opinion. We'll see. The only thing is, you can argue that there is double top risk. The previous high here on the 6th of July was just a one tick short of 7700. Where did we get to? And we got to 76. Hang on, where am I reading this right? Yeah, we got to 76.77. So we got to within sort of 22 ticks of the previous high with a negative candle. Now, that one thing I can argue for is that this could be a double top. Can you see that there? But we don't know it's a double top until it breaks the neckline, which is down at sort of $62. So we'd have to fall $13 and break that level before the double top is actually confirmed. But I just thought I'd bring your attention to it, because on the first potential peak, we certainly had a very negative bearish engulfing candle there. And we've got a second bearish engulfing candle at what could be the second peak. So there you go. There is an argument there for a potential double top in oil. That's it. That's my summary for today. We'll see what happens tomorrow. It's the end of the month today. It's the first day of the month tomorrow, but it is the end of the week tomorrow. So the weekly closes are always important. So we'll have a look at those. Good luck if you are trading in these markets at the moment. Talk to you tomorrow.